Welcome back to Coffee Kale. My name is Nicole. Today we are talking to Roosevelt and Cinawaye Elivert. We're talking all about homeowners insurance. This is one you don't want to miss. We talk about hazard insurance, we talk about flood insurance, we talk about all the things that you don't really want to talk about, but you should, because having these coverages would make a world of difference. So, that sounds interesting. Hang around, keep watching. Welcome to the Coffee and Kale podcast. Here we have an educational approach to everything real estate and finance related. If you're a first-time home buyer, a seasoned investor, or just looking for an understanding, this is the place for you. I'm your host, Nicole, and I'll be your guide on your financial journey. Grab a cup of coffee, sit back, relax, and join us as we grow together. Hello, and welcome back to Coffee and Kale. My name is Nicole. Today we are joined by Roosevelt and Cinawaye Elivert. They are, did I pronounce your name wrong?
You did, Nicole. Thank you.
Oh, good. I was just waiting to be corrected. They are insurance professionals, and we are talking about the role of insurance in home ownership and in home purchase today. So that sounds interesting. Keep watching. Thank you guys for joining me. Thank you.
That's a pleasure. Glad you asked us to come.
Combined, we have how many years in the insurance industry, roughly?
Combined, 30? About 30 years.
About 30.
About 30 years combined. I think
Second
I have
generation.
15.
My father was
Really?
insurance. I was picking up phones as a child in the
I
house.
love that.
For Dad.
I love when children are trained in something, no matter what it is. You met my daughter coming in. I made sure she gave them water and all of that. So I appreciate that. And you have your children with you too, is that right?
Actually, our children aren't young anymore. We're empty nesters. So
do they work in the business with you?
No, well, they did. They did.
Okay.
Both my sons actually worked out of my office a little bit,
Okay.
you know, when they were in high school. But now they're in college and they're doing their thing now. So,
Okay.
yeah.
All right.
Yeah.
So for homeowners insurance, we're talking about homeowners insurance today. Homeowners hazard insurance. I can use the term interchangeably.
Yes,
is that
yes,
fair?
yes,
Okay.
yes.
What is it? Let's start there. What is it? What does it cover? What doesn't it cover? 50,000 foot view. What is
Well, we can start. What does it not cover? I think that's the easiest way to start. So homeowners insurance does not cover things like mold.
Okay.
It does not cover things like normal wear and tear, maintenance.
Okay.
And if you want to talk to one of the big ones.
Also flood. It doesn't cover flood as well. That's an important thing. A lot of people, don't realize that you got to get something separate when it comes to flood insurance.
Okay.
But if you live on a floodplain, right? Because 9 times out of 10, if your mortgage company doesn't require that you purchase flood insurance, I don't think I'd worry about it. Because there's like the 99-year flood.
Now, do you guys offer flood insurance though? But it's just separate from homeowners insurance.
It's a separate policy.
Okay.
But we do actually offer it through our company, and then we also offer it through NFIP.
National Flood Insurance Program.
Yes.
Okay.
Yes.
So we offer it 2 different ways, but it is something when our customers happen to be in a floodplain, we do offer it. Majority of people don't get it.
Okay.
Not saying that you shouldn't, because we just had a tropical storm here, right? And it happens. But when it comes to flood insurance, or when it comes to flood, it's really water rising. So if water rises into and comes into your home, that's considered flood. Your homeowner's policy won't cover that.
Okay.
That's important to understand.
Okay. So I'm sorry. Please go ahead.
No, I was just going to say it doesn't maintenance, which I think we said it doesn't cover
maintenance. That's the biggest issue. A lot of people
confused.
get that confused, and they say, well, my roof is old.
Okay.
And they say, because my roof is old, it's time for me to get a new roof. And so the first thing they say, they call their insurance company.
Please don't do that.
It doesn't do that. It doesn't cover.
The roof on your house is like tires on a car. You're supposed to replace your roof like every 30 years, unless you have a tin roof. Those last forever.
Do they really?
50, yes.
Okay.
A metal roof is more permanent.
Okay. So while we're on this, what insurance doesn't cover, moment of personal privilege here. So we had a pipe burst behind the wall. It didn't actually burp. It burst. It didn't burp either. It didn't burst. It eroded. Mm-hmm. My hazard insurance covered it. Mm-hmm. However, they would not cover me taking the cabinet out and like doing all the stuff to get to the pipe that had burst. Is that normal? Maybe not.
I would say, because they're not going to cover the pipe itself. So there's the rub. I know for a fact with our homeowners insurance product, it's going to cover the repair.
Okay.
Because was your cabinet damaged?
No. It
But
was coming
so
with
it had
ceiling,
to
but
be
they had to
moved.
move the cabinet to get
It
to
has
the
to be
pipe.
moved to get to the pipe. So
Right.
then the coverage will pay to, I guess, repair. Well, no, it doesn't pay to repair. It's not the repair of the pipe. It's the damage that
it caused.
Right.
So that's what
Is
it's
that
specific for the
what it
damage
was?
that's caused, not the repair of the actual
As
pipe.
minor as
So-
it might be,
Yes.
you know, if it was a pipe burst, right? That pipe, to repair that pipe might be $20, $30, whatever it might be.
Yeah.
But it's the damage that was caused as a result of it. So if it was a storm that caused it, then that's something different. It's covered, right? Does that make sense?
Yeah.
You can't repair the storm, right?
Right.
It's whatever caused the problem, they're not going to repair, but they're going to fix all the damage that was caused by it.
Okay.
Does
So
that make
since
sense?
the cabinet wasn't damaged by the
the water
Right.
that came out.
I had to have that moved so they could
Replace
get
so they
to
can
the
get to it. Right.
fruit
That's why
cause.
that might have happened.
Okay.
Yeah.
And you know, to be quite honest, usually it's a case by case basis, right?
Yes.
You know, so not every
Claims.
single case is exactly the same.
Yeah.
That's why I was listening intensely to what you
Yeah,
said. I
yeah.
said, okay, because we could have missed a little fact that
Yeah.
might have been there, and then we just said, wait a second, that would
Your
have been
pipe
different.
was corrosion, right? So
Yeah,
it just
yeah, which
it
is
was
old.
corroded, an old
Yeah.
pipe. But there could have been, it's 20 degrees below zero outside.
Yeah.
You went to Palm Springs and you left your heat off. Don't do that. Because if your pipes burst because of, you know, the expansion, you're trying to save money, so you turn your heat off when you leave in the wintertime, then your pipes burst. We will pay to repair the damage that water causes when your pipe bursts, but you will pay for the actual repair of the pipe.
So point one, when people come to talk to me as a mortgage loan officer, I say use my office as a confessional. Tell me everything. It sounds like insurance clients should do the same with you because you were listening intently to my story,
Absolutely.
right? If there was one little nuance,
Yeah.
I probably could have had the cabinet repaired if it, you know, but I would never know that if I don't have a thorough conversation with my insurance professional.
That's a great
Huh.
point, and that's the other thing too,
How
right?
you pick
We talked about it. You know,
Yeah.
when you're selecting an insurance company, it's
Mhm.
really about one, the individual that you're working with. You want to feel that they're making you comfortable, that they're communicating, that they're trying to really educate you, right? That's key. If they're talking down to you, then you might say, wait a second, right?
Okay.
You know,
and not rush you. You want them to take their time to explain how insurance works. Like, we had to get licensed in all of this,
I see.
and it takes years to understand it. And this isn't, you know, you have another profession. You do something else for a living. We do
That's
insurance.
right.
So our job is to teach you, okay, this is how it works. This is what's covered. What's not covered is equally important. And usually it's a rule of thumb. It's like, is this something that I could have avoided?
Yeah.
So maintenance, you're not supposed to change your pipes
Right.
at all. So that's not your fault.
Right.
But you should,
Right.
you know, if you go away on vacation, leave your heat on low in the wintertime.
Right.
You know,
Okay.
your roof every 30 years roughly is going to need to be replaced.
Yeah.
you know, and I want to hone in on even on the maintenance piece one more time.
Please.
So something that I tend to see, like let's say we've got a storm, right? It blows your roof off or it puts a hole in your roof. So some people might say, oh, well, the insurance is going to cover it, right?
Mm-hmm.
And so they'll just let the water keep coming. They'll just leave the house and say, hey, we'll deal with it, you know. But you see, that's the thing. There's a maintenance side, right? If that happens, you have a duty to protect the rest of what you have in there. To get a tarp, we'll pay for that tarp, you know, but you don't just let it continue to do damage. Does that make sense?
Yeah.
So
like,
as a
Mitigate
homeowner,
the loss is the
That's-
fancy word to
that's
say
it.
it. Like,
see.
if you have your basement, you know, there's a flood in your basement now because your pipe burst upstairs, you have to clean
Turn
up the
the water
water. Yeah, turn off the water and clean up what's there.
Yeah.
Don't just leave it and say, well, they're
Yeah.
coming. Because mold,
That's
we
fair.
mentioned, is not covered. Mold does not take long to
Yeah.
form. So you got to get on it.
So is that a part, I don't want to lose the what insurance does cover piece
Mm-hmm.
of this, but I don't want to lose this thread either. Is that a part of what the inspectors do? Like if I were to follow your example, a flood in my basement,
Mhm.
you send out an adjuster or somebody
Yes.
to look at it. Can they tell if you have done things to mitigate versus if you just let it go until they arrive?
Yes.
Easily.
Ah.
Like, because if the carpet's still going squish, squish, Not a good look. And a lot of my clients, they'll take video. I'm like, take the proof. It's like the adjuster will come out. It's like CSI investigation. They're looking. Do you see, signs of, normal? Has it always been wet? They can tell.
This is when honesty is your best policy too, because we'll have, I've seen cases where an adjuster will come out and say, they came out 2 days after the claim, whatever, let's just say, right? And they'll see mold that developed that looks like it's been there for weeks. At a time, so like, did this really happen? It's black. Did it just happen, or is it from something previous, right? Or has this been ongoing? So there's, I always stress that part.
Yeah, even with a roof, because like you look at the ceiling and you can see water damage marks on the ceiling. And if you see a water damage mark, or the roof, I had one that was started to cave in. It's like, don't let it get to the point where your ceiling on your second floor is caving in. Something's wrong. Yeah, that's a problem, right? You need to address it sooner rather than later.
Okay, so it sounds like, they'll look at them.
No, they'll look at the wood itself and say this wood is rotten.
Yeah.
Because the water has been on it for years.
Yeah.
Like a little drip, drip, drip. Over time. Yes.
Kind of like, it amazes me how like firefighters or arson investigators can figure out the start of the fire. It sounds like insurance adjusters are like that too. Like, I can figure out if this is new or if this has been here for a while.
And I'll even add, that's not the end, right? Just because an adjuster comes out and they're giving their position, you still have a right to communicate and say, wait a second, and challenge what they're saying to you, right? I always tell my customers, if that's not the case, please tell them more so that, there's a dialogue before they finalize the claim.
Definitely. Everything is negotiable, because I always say, I'm the fixer. My job is I don't do the claims. I sit behind my desk, but my job is to make my clients happy. So for example, if in your basement it was, damaged by water, we can, and they only want, the insurance company's like, we're just going to replace this part of the carpet. But we can't have your carpets looking not matching. So if we need to replace the whole thing, then let me know, and we can argue that.
Point 2 is piggybacking on point 1. Find an insurance agent that you trust, because things are negotiable. It's kind of like an appraisal in the mortgage industry. Appraisal comes back low. That's not the end all be all. You can protest
there is some
it.
wiggle room. Insurance coverage is black and white. Right? There's lots of contract terms to say what's covered and what's not covered, but the amount can be negotiated.
Okay, so it sounds like what is covered under hazard insurance, homeowners insurance, is an event, right? An act of God is what I usually say. So please correct my language now. When I'm talking to people about homeowners insurance, I say acts of God are covered.
Yes.
So lightning, or hail, maybe.
Okay, so
point of personal privilege. Yes.
All right. Oh man. Okay. So
help me with my language.
That could work. However, there's certain acts of God that's not covered unless you have, let's say, an endorsement or something on there, like an earthquake. It does not come standard on a policy, right? And that's an act of God. And so you would have to have a specific endorsement. Do we have a lot of earthquakes here? Although we did have, a small one several years ago. But the point is, it doesn't cover all acts of God, but it will cover, if there's a storm, so stuff like that,
tornadoes, that's wind.
Yes.
So that's covered.
Yeah, wind, rain, it covers. But remember, not rising water coming into the home, right? Okay. If your roof gets blown off, it's going to cover that, right? If the whole roof comes out, water's coming in from the top, it's covered, right? Okay. That's covered in the homeowner's insurance. The other thing that's covered is fire. Okay. So if your home is in a fire, it's covered, right? That's an easy one, right? If there's a fire and it burns the whole house down, that's covered, right?
That seems pretty.
And theft is covered as well, right? If somebody comes in and robs stuff, in the house, that's covered. But the thing is now, so the key is you have a deductible.
Now we're getting into the nitty gritty. Okay. Right. So it's covered, however,
subject to a deductible. And so your deductible can range from different numbers, right? On average, usually it's about $1,000 on average, or you can go with a higher deductible. Okay. So the lower the deductible, the more you're going to pay in premium.
That's important to know. Related,
right?
So because you're not coming out, I'm already paying $1,000.
It's the same thing like car insurance.
Okay.
Yes. So if you're trying to lower your rate, you want to go with a higher deductible. But one might say, well, why would you go with a higher deductible?
Yeah.
Well, the reason is because your deductible is what you're willing to take on if you have a claim.
Okay.
So if you have a $2,000 deductible, what you're basically saying is, if there's a claim, I'm willing to pay the first $2,000, right? And that might be okay. Exactly. And you're going to pay a much lower rate. And so I'll tell customers, if you want, go with a higher deductible. You can go ahead and have a lower rate.
Mm-hmm.
And then that extra money that you're saving, put that aside so that if you do have a claim,
you have enough to cover.
You have enough to cover
Yes.
when that $2,000
Okay.
comes up. That's the key part. So a lot of people say, well, I want to go with a really low deductible. I said, that's fine. But most homeowners, if they're putting a legitimate claim, they don't put a claim in maybe every 5 to 7 years.
So that actually piggybacks nice, or like sets the stage nicely for the next question. How do you determine what's right for any one client? How do you know who needs a higher deductible, lower, who needs extra coverage for valuables?
Yeah,
It's
about protecting the value of the home, or your asset protection is a fancy word for saying we want to be able to cover the house itself.
Okay.
We don't want to over-insure you or
Okay.
under-insure you.
Okay.
So if it depends on the amount that your house is worth.
Okay.
And that's my job, to protect that.
Now, when we say house is worth, I'm gonna put a little caveat to that.
Okay.
It's how much it's going to cost to rebuild your home, replace your home.
Is this the replacement value? I hear my
Versus actual
practitioners
cash
talking
value.
about
So-
this a lot.
So that's key.
One of the it's a foundation, the fundamental. Go ahead.
Yes, because a lot of
Replacement
customers,
versus actual cash value.
yeah, a lot of customers when they're getting insurance, they go and they talk to an insurance professional and they said, yeah, I'm buying this house for $500,000. All right, great. So that was the appraisal value. Okay, it's $500,000. All right, that's great, but that included the land. Right? We're not insuring land, right?
I see.
So if you're an insurance professional, you go to them and they say, okay, we're going to go insure $500,000, and they just take that.
That's not the good.
They're not doing their job. There's no due
This
diligence.
is point 3. We're gonna have to like bullet these.
I'm
at the
telling
bottom.
you,
I love this.
Now you
So
get
it's
it.
about the replacement cost of the
home.
building,
Because the
not
land could be worth $100,000.
this
So,
is not.
I don't want to over-insure you, because
Okay.
the company will take, if you want $500,000
They'll
insurance,
take
oh yes,
it,
you will. And when your house
absolutely.
burns out to the ground, that'd be $350. Because it only costs us.
Yeah.
The job of the insurance company is to rebuild what you have, not the
I
extreme
see.
home version makeover of what you want it to be.
I
Right.
see.
It's what you have. So it's based on,
Okay.
your square footage, your kitchens and your bathrooms.
Okay.
That's what our job is, to replace that.
So if let's say I buy a house today, and I buy a $500,000 house, it costs $350,000 to repair it or to rebuild it if it were to be
Mhm.
demolished or burned down or whatever. And then a couple years from now, I renovate the basement, I put a new kitchen in. It's my job to call you and say, hey, I now have quartz countertops where I used to have Lycra.
There's 2 parts to what you just said.
Okay, please.
So, yes, it's either your job to tell us, or it's your insurance professional to review your policy once a year.
So
Because
don't
if they
ignore
do it-
those phone calls from your
Due
insurance
diligence.
professionals that
Yeah,
say,
don't-
I just want to check up on
We
your
want to
house.
meet with you. We want to meet with you because
That's
we don't
not right
know.
for me. That might not be for your house. I'll be like, I'll get back to you. Sure.
Yeah, because a lot of people say, oh, I don't owe any money, I'm good.
Yeah.
I think I actually probably owe somebody in your office a call. If they call me, I'm like, I'll call you back. I don't know.
We're
Okay.
calling because we want to
We wanna-
we're going to ask you those questions. We're going to say, hey, have you done any changes?
Did you put solar panels on the roof? Did you upgrade your kitchens and your bathrooms? Because you used to have Formica and now you have Italian marble tile. There's a difference.
So let's say the worst would have happened, and I
All right.
didn't tell you. Let's say you had Formica, now it's Italian marble, and the house is demolished between the time that
Yes.
after you hear where I'm going,
Yes.
and I didn't upgrade my policy. Then what happens?
Automatically, the software will upgrade. So you bought your house for $100,000 30 years ago.
Yeah.
Over time, if you look at it's called the dwelling A coverage.
Okay.
And that coverage is going to increase every so often.
For inflation.
It's good for inflation
Okay,
because it's
okay.
going to drywall costs more
Yeah.
now than it did 20 years ago. So it's gonna the software. It's not your agent that's going in there. I'm gonna make her pay. No, the software is bumping up every so
I
often anyway. So it kind of keeps in touch with inflation. But if you went, you luxed out with Italian marble tile and you built on a little 40-foot by 20-foot extension on your home, you might be short.
But
Really?
I
If
will
you
say
didn't-
this.
Huh.
I will say this. On the policy, most policies have a built-in extra
Cushion.
20% cushion
Okay.
that's in there. Not part of the dwelling A. It's just out there on the. It's another line item
Okay.
for those just in case things.
But
It may not be enough.
It
That's
may
why
not
she
be
said
enough.
you
Yeah.
might be at a loss if you
Okay.
didn't have an adequate amount. If you were really off, see, because that's another thing, right? And that's a whole other question.
Yeah.
But
Well, please,
But I'll-
by all
I'll-
means.
so
With the neighbors.
when you're getting your insurance, right? One of the biggest issues is our most customers are looking for what? The cheapest
cheapest,
price,
yeah.
Keep my costs low.
Yeah.
right? But that's not always it. By doing that, what you're doing is you're saying, all right, well, I don't need these other endorsements that could have helped me, but they're gonna do without it, and they'll be undercovered. And for stuff like that, that's why you gotta have a good review on the front end.
And understand, what is it?
What's
What is
in it?
what is it covering?
So this
In my
isn't really a
homeowner's
set it and
insurance.
forget it type process.
No.
This is a.
It's continual. This is the biggest
How often
asset.
do you do the reviews?
At
Annually?
least every year.
Yeah.
Okay.
Every year, every 2 years, because this is the biggest investment that most of our clients will ever make in their lives.
Okay.
And they're mailing out, or it's escrowed, so they're not thinking about it. They set it and forget it. But this is what they're paying for.
Yeah.
So it is in your best interest to understand what your policy is going to cover. And we can talk to the whole. There's some companies, when you're choosing an insurance company,
Yeah.
there's something called replacement cost and actual cash value.
Okay.
Those things are important to know. A lot of companies, larger companies, more well-known companies do replacement costs, i.e. your kitchen burned down, you had a kitchen fire, and you had a Kenmore range in your kitchen.
Sure.
And that Kenmore range was 15 years old. They don't sell that model anymore, but we're going to replace it with the like brand because it's replacement. We're going to replace your Kenmore range with the equivalent model that is up to date because they don't sell the one that you bought 15 years ago.
As opposed to
That's
depreciate.
replacement cost as opposed to
Depreciate.
or actual cash value. Because that range that you have that's 15 years old, here's $200. Good luck with that.
Oh, really?
You do
Some
not,
of our
some
other insurance
smaller,
companies.
maybe, and again, this goes to the whole, give me the cheapest policy out there. I just want to cut costs. Give me the least expensive. Actual cash value is just that. That flat screen TV that you bought 2 years ago, open box of BJ's for $2,000. Now here's $50.
Yeah.
You make that work.
I actually have one of them on the wall.
Oh, I'm not
And it's
gonna
the
go.
one-
I love that. I shop
Circuit
on
City.
sale.
It was the
Shout
Circuit
out.
City
Yeah,
open
that's
box,
awesome.
and they're closed.
Don't
Not
buy
only is the
open box.
model gone, the store is out of business.
Oh, it's all about the deal.
But
Get the
so
open
this
box.
is actually a really good. It's sparking so many things, like a little firecracker going off in my head, because when I'm required most of the time to include hazard insurance in the monthly mortgage payment, right? And this is why I partnered with them for years. If I get a quote that is high, that makes that monthly mortgage payment slightly higher than what maybe we started with, or for whatever reason it's higher than what we expected, these are the conversations the buyer needs to have with the insurance agent.
Yes.
Because I'm not qualified to describe actual cash versus something else.
Replacement cost.
Right, so there's maybe 0.4 now. Like, we really need to be in communication with our hazard insurance providers while we're in the escrow process in a home buying purchase, or in a home buying process, because we don't know what's covered and what isn't.
Right.
And you need to know what you're foregoing to get that cheaper policy.
Yeah. I would always sacrifice my recommendation. I would say deductible. I'll go with a large deductible.
Yeah.
Why? Because
Okay, there you go.
if I have damage with my home, chances are it's gonna be big. Right? I'm not gonna file $1,000 claim on my home. And I tell my client, like, if you have $1,000 deductible, and let's say you had $1,500 worth of damage, I would not do not file that claim.
Yeah.
Because contractually, yes, the insurance company has to give you have $1,000 deductible, and it's $1,500. We will give you that check for $500. But then you have a blemish, just like with your car insurance. You have a little bit of a blemish on your homeowner's insurance, and a $500 check when it comes to, like you said, it's a $500,000 house.
Yeah.
And then we're going to fill it with like 75% of a $500,000 worth of personal belongings.
Right.
All of that is covered under your homeowner's insurance policy. So I would say as a rule of thumb, I'm not filing. If I'm gonna file a claim, it's gonna be big. I mean, a car, yes, I'll have a little deductible, $500 deductible for my car, but for my home,
for the house,
I'm talking about a $500,000 house, $400,000 to fill it up.
So, two things come to mind based on that. One, when you have claims, how does that affect you? Is one claim a bad thing? And quantify bad for me. Is it bad a higher cost or bad uninsurable? Like where's yes, please.
That's a good question.
Okay.
Yeah.
So, all right. So, I mean, I've been living in my home. Well, forget that. I've actually never put a claim on my home.
Okay.
Any home that we've lived in.
No.
And even before we were insurance professionals. So I say that to say, claim, especially on your home. We're going to just talk about home.
Just home. Let's not talk car.
When you're putting a claim on a homeowner's, let it be something big.
Okay.
That's the first thing.
Get your money's worth. Let it be big.
Let it be big. Don't waste your time putting it on something that's frivolous. It's not worth it. Claims are for I want to say catastrophic issues, right?
Okay.
That's what I put claims in for. Otherwise, I'll take care of the small stuff. That's the first point. Now, if you put a claim in, what does that mean? Now, it varies with insurance companies. However, what doesn't vary is once you have a claim, once you have that blemish, if you leave the company that you're at and you try to go to another company, I guarantee you your rate is going to be maybe another $5,000-$6,000.
But we can't even write you 3 years
for one claim.
But let's not be specific.
Yeah, some companies will say no. You are not eligible. You have had a loss with it, and that's what I'm saying. Make it a big loss.
Yeah.
If and water does more damage than fire, so that you know, because accidental sprinklers deploying accidentally, that was like almost $100,000 loss. But quantitatively, her insurance went up maybe $90 for the year. So I wouldn't be like with auto insurance. It doesn't work like that.
Yeah.
With homeowners insurance, I've had large claims that the next year there's a little bit of a blip. But the thing is longevity. That's also important.
But to her point, though, your rate when you have that claim doesn't mean your rate's going to go up because of the claim. It's not going to go up.
Not with a home. That's not
okay.
Most times it won't, right? And it could vary, and we just know from two specific companies.
Yeah.
It won't go up because of that claim. However, that company, if you have another claim back to back or too soon, they will drop you.
How long is too soon? What's back to back in the insurance?
Great question. It really depends. It's
a risk analysis.
It's a risk.
Is that what I'm hearing?
That's exactly.
I'm glad you
Even
said
if you just got to the company, let's say I just joined this company, and 2 months later, my house burns down to the ground. Guess who's not going to get renewed? Guess who's going to?
And you know why?
Let me
give you the why behind it. A lot of people say, "Oh, that's wrong," and I say, "But look, if you got the insurance, right? Let's just say your insurance is going to be $1,000 a year. All right, you got a $1,000 a year policy. 2 months later, you have a claim. Now the insurance, it's a business decision now. The insurance company looks and says, we've only collected $1,000 for 2 months. We paid out $20,000. Let's just say whatever for that claim. I told you this. It's all about statistics, right? Actuaries decide insurance, and so they made a decision, and they said, wait a second. If most homeowners don't have a claim but every 5 years, and we've accounted for that, and this person had it in the first 2 months, we're going to do a risk analysis here. Does it make sense to keep this customer? Because now we're in arrears now.
Yeah. And
it's going to take us how long
to
break even, right? And you want your insurance company to be that way, because if they're not doing this risk analysis, then they're not going to be solid or financially stable to pay for these claims. So that's why your rates go up. That's what happens in general. So yes, there is a risk analysis that happens. So I can't tell you is it going to happen if you have 2 claims in 1 year or within 2 years. I can't tell you.
Depends on the circumstances.
The companies are different, but the key, what is consistent, after you have a claim, you have a blemish, and it follows you. It follows you for at least 3 years. So, I don't want to be company specific, but if you go to her company and you have a claim, she can't write your homeowner.
Really?
If you had a claim
within
36 months.
Can't write it.
Right.
So I might be living down my burst pipe. I can't remember exactly when that happened as I sit here.
Now, my company will write it. We will.
Okay.
But we'll put an increase.
Take
There's
a
an
little
increase.
asterisk.
So it won't be as
Yeah.
nice. Your rate won't be as low as it
Damage
would have been
goods.
had you had zero
That's how they
claims.
look at you.
That's the key.
Yeah.
So every so often I try to insure somebody. I'll call you guys and you'll
Mhm.
say I can't for one reason or another. And they get pushed to, these are my words, that like last resort insurance or
Mhm.
whatever that is, a government, like
It's
can
state.
you come
It's up
back?
to the state.
First,
Right.
what is that? How does it operate and can you come back from that?
Oh yes, you can. Yeah,
Okay.
yes you can. It's almost like it's like a pool. You know, it's almost like it's a high risk pool.
Okay.
And so when you go there, you are going to pay a lot more.
Yeah,
So
they're
it's not a
always
little,
very
it's a lot.
expensive.
So it's very
I do
expensive, and
get
that's
those,
just the problem. That's just something you're going to have to deal with. But you can come back from it. It goes back to that. Most companies, I can't speak for everyone's guideline, but most companies will allow you to come. If you haven't had a claim within 3 years, most
Okay.
companies. Our company will allow it. We have a cap. If you had 2, then we're going to say
2 strikes.
2 strikes.
Really?
We're just one
And
strike.
is that only hazard or does that include car insurance?
We're just
or-
talking about just
home.
hazard.
Just home.
We're just talking about home.
Okay.
Yeah.
Okay.
So
Okay.
definitely there's a difference. So yeah, you can come back. Never. Another thing. This is kind of a tangent.
Yeah.
But if your mortgage company puts that insurance, because you had no insurance, forced insurance, that's the
Mhm.
worst. You don't want that.
There you go.
It's always going to
Yeah.
be more money, substantially
Yeah.
more. So I always tell my customers, don't get caught with that. You need to get out of that. And
Yeah.
let's see what we can do to find you something else.
That's one of those mailers you get that you want to ignore. Don't ignore the forced insurance.
No.
But just like I've been ignoring your poor. I'm gonna call him back this week. So I have a question that's come up through this conversation. This is all included in your hazard insurance premium or your monthly payment, right? So we include your homeowner's insurance as, let's call it $500 a month.
Mhm.
It covers most of what we've talked about today.
Yes.
But you can have riders. Like, what if I have my grandmother's mink coat or my great grandmother's pearls? Do I include that in what that monthly payment that goes to my mortgage company that escrows
Yeah,
for,
that's
or
a great
can
question.
I do something
There's
outside
an
of that?
extra policy. Great question on that. There's an extra policy, like a personal articles policy.
Okay.
Because a lot of times there's a cap to how much your homeowner's insurance policy, for example, will pay for jewelry. So
I see.
knowing that, if you have a string of pearls worth
Right.
$5,000, you might that may not be covered on your traditional homeowner's policy. A personal articles policy is very simple to write, and oftentimes they have a 0 deductible. Like for wedding rings, timepieces, where there's a 0 deductible, you want to cover those items separately, or even like antique furniture, artwork. If you have a $15,000 painting on your wall,
You better
would be
tell
You should
upset.
someone.
have
Yes,
a personal
tell-
articles
to
policy.
cover it,
for
because
that.
your homeowner's insurance policy has a cap to how
You mean
much.
I can't write that
Yeah,
in my marble floors, my Basquiat on the wall. I
No,
can't,
that's a separate standalone policy, but there's no deductible for that. So if someone came in and stole it, you would have a 0 deductible if you had that
Okay.
personal
Replace it.
articles policy
We'll give
on
you the
that.
money for it, yeah.
Versus, paying the $2,000 deductible for your homeowner's policy. So it makes it a little bit better.
It's actually
to
better,
have
yes.
separate.
Because
Okay.
what's beautiful about that is it doesn't impact. Remember how we talked about having a claim on your homeowners?
Yeah.
It's not a claim. It's
On the
separate.
personal articles.
separate,
So if someone
yeah.
steals my painting.
Steals your painting. Let them
It's
steal it.
separate
If someone
from-
steals
we
my
always
wedding ring, not
recommend
that I want them to steal it.
Right, I understand.
Oh well, I'll just go to the jewelry and get another one because this is insured.
And I'm glad
It's
you
not
asked
worth
that,
the
Nicole,
loan.
because what you asked is that's what your insurance professional should be trying to figure out,
Explain it to you.
right? Because when they're asking you, because when you said, "Oh, how do you determine coverage?" You asked that earlier. Well, we Cinawaye explained it's about protecting your asset, right? But the other thing is we got to also ask the right questions and find out what is it that you have, because part of your
I didn't know
homeowners,
looking at you.
right?
A string of pearls.
Part of your homeowner's
They
insurance.
were right.
Okay.
Part of your homeowner's insurance policy, there's a liability side as well.
Okay.
And so some agents will just say, "Oh, we'll just put 300,000 blind, and that's it." But what that's saying is, if someone was on your property or something, or got injured on your property, and they decided to sue you, that's what that's covering. So what happens? If I put a blanket $300,000 and you have a net worth of $2 million, did I adequately protect you? Because if I'm suing you and I know you're worth over $2 million, I'm going for as much as I can get, and that $300,000 is going to fall short. And if it falls short, well, you have to pay for the rest out of pocket.
Yeah.
If
Your
you're in a
homeowner's
lawsuit.
insurance policy is a contract. So what does that contract cover? And if, like Roosevelt said, if it covers $300,000, but you're worth
what
more
you
than
get.
$300,000, then that's the rest you would be
So it's
responsible to pay.
asset. We're protecting your asset and you. We'll make sure we're protecting you. You know, if you have nice paintings, etc., we're protecting us. So those are questions we're going to ask to determine: do we need to do a separate thing,
Okay.
a personal articles policy? The one that we didn't even talk about was an umbrella
I was
policy.
just going to ask about that
Right.
actually.
That's something else because we have customers that are high net worth. You don't even have to be high net worth, to be quite honest. But an umbrella policy is literally kind of like it's described. It's an umbrella that goes over your home and your auto and everything that you have, and it starts at $1 million or higher. But
and it can cover multiple homes. Is that right?
If you have rental properties,
yes,
exactly.
it caps it at a certain number of homes. Most of them cap it at whether 3 or 4 homes.
Okay.
If
Then
you
you
have
go
like
to
rental
a
property.
commercial liability umbrella policy. So it's a commercial. It's still protecting you. It's an umbrella, but we have personal umbrellas and we have commercial umbrella policies. If you have more than
For
a
the
certain
business
number
owners
of
that have
properties.
multiple stuff, but the key is this, and don't think. A lot of people say, "Well, I don't have a lot of money. I'm not a millionaire."
Yeah.
No, see, because the thing is, if you let's say you're in a car accident, you know, if you're in the umbrella kicks in, and if you're in a car accident and you hit someone who's, let's say he's a doctor, right, and that doctor, let's say that doctor dies, right, and so now that family has lost the income that was coming in from that. Well, that person has to sue for what they lost. And you're not going to have that. So an umbrella policy is there to protect us, you know, in so many ways. And most attorneys recommend you get it, you know, from
pennies on the dollar. It sounds like, $1 million umbrella policy. It's literally like there's another discount to get the umbrella policy. So it's kind of like it's the whole bundling concept. Get an umbrella policy. Why? Because you would rather your insurance company pay than you pay. And that's the whole thing. It's like, do you want to pay? If you hit someone and you're in an accident and they're injured, do you want to pay for their pain and suffering, or do you want the insurance company to pay?
So those questions you're asking folks up front are not to upsell them. It's really to figure out how that. Because I mean, that's
like, wait a minute, you just
you just want to buy
I'm
something.
so glad you said
No,
that. I
they
hate
really are.
Because I don't want it to be my fault. That's the whole thing. It's like let's talk about it. Take it or not.
She just said, we don't want it to be our fault.
No.
If we don't talk to you about it, it is kind of our fault.
Yes.
If something happens that you could have covered that you never brought up,
Exactly.
and I, as a homeowner or as an
You're
insurance
coming-
seeker,
exactly.
I
Yes.
don't know that.
Thus,
You're
in the
coming to
annual
us.
review, when you talk about it and say, well, what's new?
You
know,
just
did
want me
you-
to call it out. I'm gonna do it. No, but I'm
Yes,
serious. Like in
'cause
all
things
seriousness,
change.
there's a true value to it.
Things
really
change
is.
over
Yeah.
time, and it's like, what have you done? What have we missed out on? What did you purchase and make any
Yeah.
large purchases? Having
Yeah.
kids, things happen. Because one of the main things that's not covered in your homeowner's insurance policy is if you die.
That was gonna be
No
my
one's
next question.
paying
You
off.
read my mind
Yeah.
on the umbrella policy. You are reading my mind on life insurance. Because what I get a question I get a lot is the mortgage insurance portion of a mortgage. We can have a whole another conversation about that. But mortgage insurance does not benefit the buyer. It benefits the bank.
Yes.
So the question, once I explain that, the very next question is, well, what do I get to benefit me in the event that I pass on?
Life
How
insurance.
We like to
how do we?
Mortgage
We call it
protection.
mortgage protection.
The difference,
Okay.
mortgage protection versus what you said, mortgage
Mortgage
insurance.
Yeah.
Right.
Because again, mortgage insurance is where you buy a $500,000 policy. Let's say your premium is $50 for 30 years. Your premium is $50 a month, and you're paying $50 a month. Then 10 years later, you've paid off some of your home. So the price that the policy, number one, is going to the bank, not your family, and it's not the same amount because 10, 20 years into the purchase of your home, now you only owe $200,000, but you're still paying that same $50 a month.
Yeah.
And the money doesn't go, it's about control because you want it to go to your family, not the bank. And it's about you're spending the same amount, but the face value of the policy is decreasing because over time with mortgage insurance, you're paying off your house. So in the 25th year, you're still paying $50 a month.
Yeah.
But
So
it's
I can tell
less.
you how to get out of mortgage insurance. We could do that.
Yeah.
But it does not benefit the buyer. It
No.
benefits the bank. So if I want to protect my house, I need a life insurance, a mortgage.
Policy.
What you call it?
So we like to call it,
Protection.
we
Mortgage
call it mortgage
protection.
protection, but
Okay.
really ultimately
It's
there's
life
different types. It's life insurance.
Okay.
There's different ways we can do it. She started to describe the version where you could have it decrease over time. We don't like
Okay.
that. It's because at the end of the day, you don't know when it's going to happen,
Yeah.
right? And you technically aren't just trying to protect just the mortgage. You also want to have a little bit left behind. Does that make sense? A little bit extra
Sure.
money. We always recommend our customers get that.
Yeah.
You know, I usually, in my conversation, will say, listen, it's something that's important. You're probably going to get some stuff from the bank later in the mail that's talking about that, but we'll follow up. I'll have a financial representative in my office that will do a follow-up call and to say, hey, did you, we can't offer you mortgage protection. And it's really just life insurance.
Yeah.
It's just saying whether you're going to have a 30-year note on your mortgage,
home.
let's get
Get
something that will
30
cover you for the next 30
years.
years, right?
Now, is it an insurance product or is it a financial product? This mortgage protection.
It's a financial
It's
product.
a financial
It
product.
I mean,
Okay.
we can kind of, yeah.
Depending on
I'm splitting hairs.
Yeah, because
Yeah,
the reason I
okay.
say that, the reason
It's
it's
whole life.
it's life
permanent.
insurance, right? It's
Okay.
life insurance, so it is an insurance product. But sometimes but it can be life insurance is also a financial product as well because
Whole life
we can do
insurance.
some different
Borrows
things,
and-
right? We can do a
yeah.
variable
Yeah.
one. We can do there's different
Universal
things that we
life.
can
There's
do.
different types
Okay.
of life
That's a
insurance.
whole nother conversation.
I know, I was thinking that too.
I could go down that way.
You know what? I
feel
feel like
different types.
whole
of
life insurance in between the YouTube
Term
clips when I'm
life.
waiting for the video to go.
I can give you, yeah.
There's a
we
whole,
can
that's
break
a
it
whole
down.
discussion on life
Okay.
insurance itself.
Term versus permanent, we can go
Yeah.
all over that.
Variable
But
life, yeah.
There's so much there's so much there.
Different types of
Yeah,
life
there's so
insurance.
much there.
And those are financial products.
They're financial
hybrids.
products.
Yeah,
They're
it's
insurance,
financial
but
product.
yeah.
That's life insurance. That's
Okay.
life insurance.
But that's the way you protect your asset, protect your home as an
Correct.
asset
Correct.
in the event of your untimely or
Yeah.
just
It's
Yeah.
demise.
I had a situation before, and I'll tell a quick story.
Yeah.
I had a customer, one of our customers, we were talking about. She was actually a realtor, and we were talking to her about life insurance,
Yeah.
saying that she needed to get it. And she said, I'm gonna look at it. We showed her some stuff. She said, let me get back to you. And then she didn't get it. And she was in a car accident while showing homes, etc. And so she died.
Oh.
And when we found out about it, it really hurt us, when we found out about it. But the way we found out about it was worse. Her son, who was in a different state,
Yeah.
called and said, hey, my mother had, her home insured with you guys. I said, yeah. And she said, she recently passed in a car accident. We were like, wow. And so I, while in that conversation, I'm giving my condolences, and I pull up the file and I see a note in there saying that we talked to her.
But she didn't purchase.
But she didn't get it. And he called me. What he called me to say was, because she passed, I'm looking at trying to get the home paid off. You have the policy. And I froze. And I said, oh no. He thinks this policy is going to cover the mortgage. And it was the hardest, the most difficult conversation I had to have with him. Because I know she wanted to get it, but she didn't get it in time. And now he's stuck with this house that he has to either sell quickly or figure out how to pay it off. Continue to pay that mortgage. And it was a tough one. And I went back to my team and I said, to be quite honest, we failed. I took that blame. I said, we failed because we thought we were done by putting that note in there, that she wasn't ready to get it. And I said, we have to be vigilant. We have to be vigilant, even though they might think we're trying to upsell, etc. We need to do better at explaining why it's that important and why the pennies on the dollar is not going to make a difference when something really goes wrong. Because I don't want to have that uncomfortable conversation. I'd rather have a better conversation and impact his life a little bit better by sharing and saying, listen, your mother loved you so much.
Here's
That
what you put in
check.
place.
Bam.
Take care of things.
And I couldn't have that conversation. I had the opposite before with others, but I couldn't do it in that case. And so that was my mission. This was actually early in my career. And that was my mission then. From then on, I said, you know what? we're gonna be vigilant. We're gonna ask. And don't just think that you did your part by putting a note in the file saying that you asked. That's not gonna cut it. And so that's important.
See,
that's why we do what we do.
That's why you create
check-
a relationship with your insurance professional.
Yeah.
Because there are things you understand that we don't.
Exactly.
Wow.
We have good stories too.
That's
The
a good
opposite
story.
day, because
Yeah.
it's again, the money doesn't bring the person back.
Yeah.
But I remember sitting at a kitchen table with this man, wrote the policy for him, and he died during COVID. And I was there with the mother and the adult children, and it's still I still see, because I was like, there were dogs in that room.
Yeah.
When we wrote the life insurance policy, but that check did not bring their father back, but it gave them time to grieve.
Yeah.
And now it's like, now the daughter, she's going to take that house and put it in her name.
Yeah.
So it's what that money
Gives them
could
breathing
do.
room
What
to
that
not
money
have to
could
hurry
do.
up and
So
do
they didn't
something.
have to
That
move.
mortgages do every
Yeah,
month,
or they didn't have to
whether or
move out of the
not.
house. Yeah, and that I feel good about that, because in the opposite,
Yeah.
they had a check.
Yeah.
Now the daughter's going to put that house in her name,
Yeah.
our father's house, and
Yeah.
she's going to stay there. So it can go.
Yeah.
It can be a good story.
This
Yeah.
is a question
As well.
I have that I've never actually thought of until this moment. Does the insurance on a reverse mortgage operate differently than it does on a regular one?
No,
Or
it's the same.
okay, so you would
Yeah.
still need a life insurance policy to cover the cost of the house once the
Right. Well, getting a life insurance policy is going to benefit you, right? Just in case you die in between, right? But on a reverse mortgage, technically, it's the mortgage company now, whoever provides you that reverse mortgage, they're going to be the one that's going to benefit on that home, right?
right. But what I get often is we're in DC and a lot of mature homeowners are here. They get reverse mortgages, so they get the money every
they're
month
living off of
while
it.
they're living.
Right.
They pass on, they have to do something with that reverse.
Something
so
has
you
to
have about 6 months. It depends on
Right.
the investor. But if the deceased or had a life insurance policy,
They'd be in
it
a better
would pay
Their
the
family
reverse
could pay
off.
that off.
They could
and
choose
keep that home in the
to
family.
pay it off. Because remember, life
It's
insurance
a
is a
life
choice.
insurance policy. You don't
Right.
have to use it to pay the house.
No, you don't.
I see.
Yeah,
And there's
it
no
goes to a
tax
beneficiary.
implications. There's no tax implications on that life insurance policy.
Yes, they
With
get
a
tax.
home, you got
See,
estate
we don't
tax.
have another one of these.
That's what
It's
I'm telling you.
all
That's-
life
that's
insurance.
the
Let's
conversation.
table that.
But
to the side.
maybe, I probably need to have more in-depth conversations with you for my clients who I don't do reverse mortgages, but I know a lot of them out there to make sure they're covered so I don't have those uncomfortable conversations when I say I can't help you. If I can't give you a mortgage to cover the balance of that reverse,
Yeah.
that
And the
house has
key-
been in the family for 60 years.
And the key is get your life insurance early.
Mm.
A lot of
Is it
people
cheaper?
post.
Oh my
It's
gosh.
it's less expensive the earlier you get it, right? And the earlier you get it, you're going to be at your healthiest point
Yeah.
on average.
How often do they reevaluate your health for life insurance?
They don't.
policy?
It's on the front.
Once you have
Really?
that contract, you're good.
Never. So
Yeah,
I have to call
if
them
it's
every
a term,
year.
not at all.
No.
Not at all.
Now,
It's-
actually,
if
it's a
no,
term,
it's funny you said that. Actually, when you first got it, if you were in bad health, right, and you later on are just your health is just excellent.
Living that good life.
You're living that
Became
great
a
life.
vegan.
Yeah,
You
yeah.
can
Working
actually go back to life insurance company and ask them to reevaluate to get
Reconsideration
a
of rating.
reconsideration and could get a lower rate.
Yes.
But they will never negatively impact your rate based off of your health. It doesn't matter. That's the whole key. That's the whole key. Get it
Yes.
early.
Get it early.
So when something does happen, because I've had customers that got life insurance early, later on they get cancer or something,
and they're
right?
not insurable.
And they're not insurable.
Yeah.
But I tell them, I'm so glad we got this policy.
But here, I bet, is a part of that. How do you determine what's right for any one client? Because if I get life insurance at 25, I might get a $300,000 policy, and that sounds like a lot of money to me. But if I never go back, can I increase the limit
Great
without?
question. You get another
Yeah,
policy.
get a separate policy.
But it would be at my health at, let's say, 35.
Thank you.
And
You
I
got
go
it.
back.
I'm
So
glad
you
you
can
got it.
layer them.
Yes,
Layer.
you can layer.
Hmm.
That's a
We've
good.
got several
Yes.
policies ourselves.
Yeah.
How do you manage them all? Is it like a checkbook that you balance, or like
It's a
what?
monthly
Is it
payment,
a-
just like I pay my car.
But I mean,
you
like,
pay
how
a
do
car
you reckon?
insurance.
Like, this is my personal articles. This is my umbrella. How do you organize it? You just do-
It's paid. I pay them all. They're all paid through automated
Yeah.
payments.
But the
so
key,
it's like
though-
life insurance. Yeah, it's all.
But the key is this,
together.
right? We looked at our situation and we said, okay, what are the things that we need to get right? based off making sure we protect our assets,
Right.
make sure that we protect ourselves, right? So we have life insurance, we have long-term care, we have different things that we make sure that we put those protections in place. So, and once we know we have it, now it goes back to what Cinawaye was saying, it's just the payments. We got to keep those payments up. And then we also make sure it's kind of all documented, with our trust, our will. I mean, that's a whole other conversation, right?
Yeah.
That
We're going to
it's
have
known.
a financial planning conversation with you all.
All your life insurance to an 18-year-old.
Yeah. Okay, so for our homeowners or prospective homeowners out there, we've talked about a lot of things to consider. What are the biggest mistakes? Maybe 1, 2, 3 top mistakes homeowners make. I already know one: not doing your annual review. What else can homeowners do to kind of along the maintenance line? Like if I caulk my tub, I don't have to worry about a leak. If I X with my homeownership policy, what am I preventing? Like what mistakes do they make that we can head off?
I think, again, just like when they shop just by price. Because that's when we get into the whole, I'm getting the least expensive, give me the least expensive policy, which I shop at Marshall's and TJ Maxx. So I want a deal, but I want to understand, like, I don't want to have actual cash value. I want my home replaced, not, actual cash value. So don't always shop by price and price alone.
At the price.
Because those endorsements, you want to make sure that things like service line protection is one example where your homeowner's insurance policy does not cover the water main line to your home, that little line that goes through your yard to your house.
Yeah.
Your homeowner's insurance property protects the 4 walls of your home.
Okay.
So that service line is an additional policy.
And that's an endorsement.
That is an endorsement, or you can buy them through external companies. But
Okay.
just knowing,
It's
again,
inexpensive.
it is inexpensive. But if you don't know to ask the question, that's a $10,000 fix. If
But
the
it's very
tree roots-
expensive.
Yes, if the tree roots, I'll look at you like, I'm sorry.
Okay.
So some people will include it in the homeowner's policy, but you don't know what you don't know,
Okay.
and that's the part where you have to ask that question. So it's kind of
So
like,
some insurance companies won't offer it too. Some do, some don't.
Okay.
And those that don't, it's okay. You can get it from an outside company, pennies on the dollar. It's very inexpensive. So to back to your question, endorsements. Don't, if your insurance provider is telling you about different endorsements, listen up.
Listen, don't just say, no, I don't need that. The cheapest one.
Yeah.
One endorsement that I think I always recommend, I never leave it off. I see a lot of companies leave it off, and it might cost $200
for the year.
And that's the backup sewer drain coverage.
Mm-hmm.
And most people don't know what it is. But it's literally what it's saying. So if water gets backed up into your home, like through the toilets or what have you, or it could be from a sump pump that fails, and then water's coming into the home as a result of that failing, you want to be able to have coverage for that. And so that's not going to be covered on your regular policy. No policy covers that. It's an endorsement. I always add it. I get customers that are shopping, they come to me with a policy, and I look at the policy and I say, they left off the endorsement. And I could simply say, I'm going to leave off the endorsement just so I can beat the price. No. But we don't do that. Because it's a more uncomfortable conversation later. And they say, well, why didn't you tell me about that? I would have gotten that coverage had you told me.
I see.
So we always tell people. Because, like, let's say you're buying, an older home, and, I mean, the pipes could fail. Things, coming into the... We don't play with that. If you live in a home that has a basement, that has a sump pump. So we always include that. We have some endorsements for like roof and siding. We always include as well. So it's just different things like that. So the mistake, back to your question, is make sure that you listen in on your representative talking to you about the different endorsements. Don't just kind of say, no, I want the cheapest. Cheapest it's not always the best.
So don't shop on price. Do that annual review and understand what coverages are included, your replacement cost, value, and have your coffee before you talk to your insurance provider, because they're going to talk about sewage lines and roofs and backup plumbing. There we go. Is there anything else we haven't covered about homeowners insurance specifically that you want to be sure our audience knows? audience is primarily first-time home buyers, investors, folks in and around the real estate market?
Well, you know what? One thing that I try to do with customers, well, I'll make 2 points.
Sure.
When you're getting ready to get homeowners insurance, you as the professional, make sure you talk to the customer to find out, have you guys had any claims? Like, because you're a renter or stuff like that, that's going to hurt them. Because they're going to come in that initial quote that you told them they might get it for.
I've learned that the hard way.
It's going to blow the whole deal up.
Yeah.
It'll blow the whole deal up.
Or cancel it with some companies.
Yeah.
Like, oh, you're not eligible for this company because you've had one claim. Or now your price is going to be higher.
Yeah.
A lot of times it's looked at differently with some companies. Like, if, for example, if it's your residence, that's it's looked at differently when your home has a claim versus if your rental property has a claim.
It's a little look.
It's not
it
matters.
It matters, but it's not as drastic.
Okay.
Like your primary residence, that's important. And the rental dwellings that you have, it's not that you wouldn't be eligible with certain companies. They'll upcharge you a little bit, but it's not your fault. You weren't even living there.
Right. And the second one that I would say is when you're shopping for insurance, what the insurance professional is going to do is they're going to pull up that home that you're getting ready to insure. They're going to pull it up. They're going to see you didn't have it insured, but some claims may pop up. And
against the property.
Yes.
Against the property.
The records.
And I like to I'll tell my customer, I was going to say, did you know that there was a claim on this home? It wasn't by you, but 2 years ago, and it was like a water claim. Were you aware of that? You might, I'm not trying to mess a deal about it, but you may want to have a conversation to find out, was that repaired?
Look at the
Does that
inspector.
make sense?
Yeah, and while you're in escrow,
wind
that's
damage,
the right time
know
to
what
do
you're
it.
buying.
Roof, yes.
Know
Do your
what you're
homework.
buying.
The inspection is very important
The
because
home
once
inspection.
you buy, once you sign. on
So
the
we'll let
home,
them know there was a claim on this house.
Yep.
It wasn't you, and that's fine because
Right.
you're getting ready to buy this house.
And
But
I
that might be
suppose
something that comes up.
if you have a series of claims too, like there's a water claim
Yeah.
5 years ago and then 2 years ago, and
Exactly.
They're just band-aiding the problem, especially if it's the same area. You're like, wait a minute, why is this?
Yeah, I think that's probably. I think we talked about it a lot.
We did. We're gonna have to have you back and do a whole different financial planning one and life insurance one.
We'd love it.
Yeah.
Yeah. So
Definitely,
before you
definitely.
go, the name of this podcast is Coffee and Kale because they're the two things that keep me going. Coffee in the morning and kale at some point. What about you all? What keeps you charging up that hill every day? Doesn't have to be two. The floor is yours.
Yeah, that's a tough one. For me personally, I guess. Okay, so for me, it's personal and business, right?
Mhm.
So from a personal standpoint, it's my faith, it's my family, and it's I guess my health, right? Because all this is nothing if I can't, if I'm not taking care of it, right? Taking care of my body. So that's from a personal perspective. But from a business perspective, what really keeps me going, why do I keep doing what I'm doing? It's really, I love my team and I love to coach. That's what I do. To be quite honest, I don't sit down and write the insurance. I don't do that anymore, right? My wife laughs at me, but I've got multiple officers. I've got a great team, but I spend a lot of time coaching them and developing them so that, whether they decide to stay there or do anything else, but it's about making them better at their craft. And so that's what I love. I love coaching. I've never coached a sports team or anything like that, but I coach people and I like developing people. And that's why I continue to do what I'm doing and I'm continuing to grow.
Coach Prime.
Well, I can say, Coach, baby, I am a CU alum. You know I'm all over. Yes, that's my alma mater. I love it.
You're loving it.
Okay,
Right.
loving it. Even coming off of an Oregon
I know.
bus, but
It's
it's
all right.
okay.
That's
It's all right.
I wanted to say that shows when I work with your team and when those in my office work with your team, they're always on it. Like they try, they twist it, they come back and say, Nicole, I really tried, but I can't. Or yes, here you go, here's something. So it comes through. It comes through in the team. It really does. What about yours, Cinawaye?
It's my why is what keeps me going. Because you're like, what's your why? And my why is my family. So my husband and my 2 sons. That's why do I do what I do every day? And it feels good to help people, right? I'm an educator. I would talk for free. And I talk a lot. Self-awareness. So helping people, because what you don't know can cost you a lot of money. You know, I do work with my clients still because I enjoy that part of it. You know, yes. So I like to help people.
Thank you both for joining, and that comes through too because you just shared so much with us today. Thank you both.
Thank you for
coming
having us.
down.
We really appreciate it.
Thank
Much
you.
success to your business and the podcast.
You both too. Thank you. Thanks for tuning in, guys. Don't forget to comment, like, and subscribe. All of their information will be in the description box below to answer all those questions we didn't get to dive into today. And we will see you next time. Coffee Kale. Take care.